It's time now for Barron's Buzz, where we take a sneak peek at the new issue of Barron's Magazine. Here to walk us through is Barron's senior editor, Jack Howe. Jack,
how are you?
Thanks for being here. All right, you guys have a new poll of money managers out in this issue. How are they feeling?
Our big money poll, we talked with more than 150 top money managers. We get their thoughts on what's going to happen with the market. People like to use this different ways. Some people use it as a contrarian indicator if people start to bunch up and be too bullish or too bearish. What we find is that the majority is still bullish, but not quite as bullish as they have been in the past. And a lot more people are neutral right now. On average, though, they think that the economy is healthy. They think stocks could head 10% higher over the next year. But the levels of bullishness have come down, and you might read that as kind of healthy for the market at this point. We've got their thoughts on which stocks they like, where should your asset allocation be, where do they think interest rates are going. So real diversity of opinion, something there for everyone.
All right, next up you have a look at some of the risks hedge funds are facing right now. Lay it on me.
Bond hedge funds, you've got to be careful. You know, hedge fund fees are high, of course, and bond yields are low. And the way you make that work is you use a lot of leverage. And that can be a big risk if rates rise. And our writer here argues that, ironically, it's the hedge funds that try to protect against rising interest rates that could be the most vulnerable right now. A lot of funds out there will buy high-yield corporate bonds and they'll short treasuries to try to offset the risk of rising rates. But you could see the spread between those two types of issues widen if we see a rising rate environment, and that could be danger for these. So if you own hedge funds, if you're in a pension that invests in hedge funds, you should read this story.
All right, last up, you can get wine of the month, you can get cheese of the month, and now you can get your art by the month.
I like this idea. We look at, a company they call the Netflix of art. The company is called Turning Art, and you can basically rent works of art as little as $10 a month, and it gives you an opportunity to try something out, see what you like, develop your taste, and turn the stuff over. I think it makes a lot of sense for someone who doesn't have millions of dollars, for apartment dwellers, that sort of thing, don't have millions of dollars to spend on art. And I'm not sure if they have the dogs playing poker or anything that would appeal to me, but it's an interesting idea.
Also, if you're just fickle. All right, Jack Howe, thanks for joining us.
Thank you.